Welcome back to Robinhood Stock Market Watch List. My name is Carlos, and in this video we're going to take a look at Friday's activity as well as look ahead this week with the scheduled economic reports, things that will have a big impact on the stock market before it happens. So first things first is being able to take a look at something that can provide you the information on the scheduled economic reports. Now I use investing.com. You can use the mobile application or their website. Now if you go to the investing.com, you can always click on news as well as the economic calendar section under more in news, and then once you have configured a couple filters, the only thing that you really need to see is put a check mark under United States and under 3 stars, providing you with all of the most major economic reports that will have the biggest impact on the stock market. Once you click apply, then you just click on the this week, just to kind of take a look ahead on what's about to happen. Now if you take a look at this information on your mobile device, it'll show your time zone, time of when the report will be released. But if you're looking on the website, it may most likely be on the Eastern time. So make sure that you are aware of when the economic report is going to take effect, because sometimes it could take an effect even before it's released if it's really anticipated that it's going to do what a lot of investors believe it's going to do. So looking at for this week, we can see that Monday is a holiday, so Monday's closed. There's no market activity on that day. So going into Tuesday, usually investors are going to be very, very eager to get back to trading after a 3-day holiday. So usually that's a couple points right there. But looking at this economic report, which is scheduled to be released at 10 a.m. Eastern time, which is 30 minutes after the stock market opens. Now the ISM non-manufacturing report is more or less a business report. This report is going to be is a report based off of the June's activity, which is forecast to be around 63.5. Where the previous report was a little higher than that at 64. Most likely they just have the bar set down a little lower. It's more likely that it's going to either meet or beat the forecast, especially as a lot of states have implemented a lot of reopening, fully back up, from certain phases of the pandemic. And so it's interesting because not only will we most likely see some pretty good I think bullish characteristics throughout pre-market on Tuesday morning, as a lot of investors are eager to get back into trading. But I think this economic report will also help keep the momentum going throughout the rest of the day. So hopefully that'll all work out according to plan there. And then looking at Wednesday, July 7th, we have the JOLTS job openings report for the month of May. And so this is the month of May was a good month. Now this economic report is due to be released also 30 minutes after the stock market opens on Wednesday morning during that time. And then we can see that the forecast amount is about 9.31 million, where the previous report was also up to 9.286 million. And so it's forecast to be a little bit more, and so it will, it's basically anticipated for it to meet or beat that. So that looks really good. So Wednesday, however, when you see this FOMC meeting minutes, that is basically, think of that as a tremendous amount of volatility. There's going to be a lot of volatility on Wednesday. Now 1400 hours, that is obviously 2 p.m. Eastern time, which is really 2 hours before the stock market closes. No matter what time zone that you're in, as long as you know when the stock market closes in your time, just know that that is when a lot of volatility is going to start between there and during power hour of Wednesday. Now it's not really, this stuff can go either way. So usually when you know that there's going to be a lot of volatility, but we're just not sure which direction that it's going to go. I mean, most likely it should go up. This should be, we're in the bullish season. It's the summertime, so more than likely this, the politicians are most likely going to say some good things to keep the momentum going up. But this could be a great opportunity to straddle if you're into stock options. So just be really careful, because there's just a lot of volatility. It can go either direction. It just all depends on what they say. But overall, what investors are, including Wall Street, are very sensitive to is inflation and interest rates, and that's what the FOMC meetings minutes usually have a lot of things to talk about, but those two things are the biggest things that will have a major impact on the stock market. So just be ready going into Wednesday, that there's a lot of volatility. If there's a massive dip, that's a great buying opportunity. There should be some great recovery, or even if you buy into there, just make sure you got some good buying power, just in case. Just plan ahead, or if you fail to plan, you're planning to fail. So just be ready, just in case, no matter what kind of volatility that it is. So going into Thursday, July 8th, we have the unemployment report that's due to be reported at 8:30 a.m. During pre-market. This is going to be 1 hour before the stock market opens. Now, lately, in the last several weeks, the unemployment report has been coming down. But it almost seems like it's the market doesn't seem to care as much about the unemployment report anymore, because it's always down now, week after week. So it used to have a pretty big bullish effect on the stock market, because if it was really low, that was great, but sometimes it would go up again, and when the unemployment report, that is one of the things that we need the numbers to be down. Where most economic reports, we need the numbers to be up. Just like crude oil inventories, we need those numbers to be down, especially in the negatives, because if oil is turning over, that's a profit for the companies, or the oil companies, but also it's showing that a lot of people are driving, they're flying, they're being active, they're spending money. That's great for the economy. And so these two things are we need these numbers down. The lower the better. And so unemployment report, though, like I said, it's been down a lot, week after week. So it just hasn't really impressed Wall Street and investors lately. So so just kind of be a little cautious going into Thursday. But I don't think it's going to be that you know, I don't think it's going to be that big of a deal. But crude oil inventories will be reported, about an hour and a half after the stock market opens. So we'll see what that number looks like. Especially with a lot of people doing a lot of driving, because of the holiday, the 4th of July weekend. There's a lot of people that have been driving and flying and a lot of activity, people going to the beach, going to the cities, going out to the mountains, camping, you name it. People are very active right now. So crude oil inventory levels should be down. As you can see, oil prices and your local gas prices are going up. So this is great for the economy. And then Friday. Now, normally there are no economic reports on a Monday or a Friday, but it is very rare that you see them. But we do see that there is another a government economic report that is looks like the time is tentative, so we don't know exactly what time that they're going to release this information. But they're going to talk about the economic or the economy, how it's been doing, but also how they foresee that it'll do here in the future. And so that the investors in Wall Street will be paying very close attention to that. So you guys should as well. So these are very, very important times, as well as economic reports. And if you're not sure exactly what these are or what they mean, be sure to click on them. If you click on them, a new tab appears, and it'll tell you in a small paragraph of what it is, and the last paragraph below that of how it will affect the stock market. And so it's just really, really important that you really take a look at this on not only every week, but also on a daily basis, because on a daily basis sometimes the government may throw in a new economic report or maybe a federal speaker. Or now it says tentative, they'll actually give a certain time, and this will update. This thing updates really, really fast, and so as soon as the time reaches, at the second that economic report is released, it is released at the same time that the news companies receive them. So speed is really of the essence, and so it is really important that you guys use this. So the next thing that will have a good impact on the not so much on the stock market, but it could on the segment, is really the earning reports. Now, every Saturday I do post the top 10 the release earnings that are due to be reported this coming week, and so we have the top 10 right here. And so we're basically at the end of the earnings season. Actually, we're kind of phasing out of an end, and we're starting a new season going into the third quarter. And so usually we'll see a very slim amount, especially when there was a holiday. And so next week we'll see a little bit more, and in the next week even more. And so right now there's just a very slim amount, but Levi's is on here. They're the number one. Then we got Smart Global, Helen of Troy, Industrial Direct, and WD-40, and a few other smaller companies in here. However, and then if you've never seen this, you can click on it. You can see that each day also has different companies on there, as well as the before and after. Now, what's also important is that that you take a look at the the analysis that are also uploaded under our announcement section of our Facebook group. And so you can see here with this analysis here with Duck Creek Technologies that it's confirmed to report their earnings on a Thursday after close. The company basically's earnings release has a 32% expecting an earnings beat. So this information can really help provide you some buying and or selling intelligence. Whether if you're holding, maybe you can decide, okay, at 32%, they're most likely they're not going to beat their earnings, and they're going to miss, and they'll probably depreciate a little bit. And so or maybe you're into stock options, maybe you can look at some put activity and see what maybe people are doing, but it's just great information, with like this one here with Northern Technologies International. They're scheduled to release their earnings on Thursday morning before the stock market opens. This company has a release 38% expecting an earnings beat, so it's not really good either. AZZ is confirmed to report their earnings on Friday morning before the stock market opens. However, they have an 83% expecting an earnings beat. That is huge. Now, and I also post pictures with a lot of clues. So this clue is obviously letting us know that they are in the industrial industry. And the industrial industry is booming right now. I mean, anything that has to do with manufacturing or building anything, I mean, they're going 100 miles an hour. And so if you know anybody in that industry, I mean, talk to them and they'll say the same thing. I mean, they're booked up for a long time, with a lot of orders right now. They're hiring a lot of people. They need as much help as they can get. And so 83%. Now, when you're looking at this information regularly, average percentage is around like 65%. And so when we see 83%, that is way above average. I mean, usually, like, if we see above average, we may see like 73, 75, but 83%, that is unheard of. So when you convert it to like another a thing like odds, you have more than like a 4 out of 5 odds that this, they're going to beat their earnings and the stock is going to appreciate. And so it's great information right here. And here's SAR. They're confirmed to release their earnings Thursday morning before the stock market opens. They have a 50% expecting an earnings beat. So it's really unknown. I mean, they're just kind of cruise. They're on cruise control probably. Here's WD-40 here with WDFC. They're confirmed to release their earnings on Wednesday after close. That's July 7th. The company's earning release has a 56% expecting an earnings beat. That's a 50-50. So it's like, I don't know about that. So if you're looking for something to invest in, here's ACCD. They're confirmed to release their earning report on Thursday evening after close. The company's earnings release has a 62% expecting an earnings beat. Now we're getting close to average there, but still numbers a little low. But here is MSM. They're confirmed to release their earnings on Wednesday morning. The company's earnings release has a 63% expecting an earnings beat. Here is Helen of Troy. Helen of Troy is expected to release their earnings on Thursday morning on July 8th before the stock market opens. The company's earning release has a 65% expecting an earnings beat. So it's, like I had mentioned, it's about average. Then we have the Smart Global Holdings. The Smart Global Holdings, or SGH, has confirmed the release of their earnings Tuesday evening, July 6th, after the stock market closes. The company earnings release has a 69% expecting an earnings beat, so just a little above average. And then last but not least, Levi's is going to be the most anticipated release earnings this week. This will be scheduled to be released at Thursday evening after close. That'll be on July 8th. The company's earnings release has a 74% expecting an earnings beat. So that is not bad compared to previous, where I've seen where Levi was usually around the mid 60%. So being in the 70%, they probably had a pretty decent, second quarter, and so it's not bad. And so another thing to look at too, every Sunday, investing.com will release the top 5 things to watch in the markets in the week ahead. So that they will notify us when you have the mobile application, but also you can look at their news section under their website. So the number one thing that investing.com is saying to take a look at is the Fed minutes meeting, which I had mentioned that will provide a tremendous amount of volatility when this thing starts. And so the report here says the minutes of the Fed's June meeting, when the officials opened talks on tapering bonding bond buying and indexing interest rates increases could come sooner than previously anticipated, are due to be released on Wednesday. The minutes are coming on the heels of Friday's non-farm payrolls reports, which showed that the U.S. created the most jobs in 10 months in June, indicating that the economy closed out the second quarter with a strong momentum as the reopening continued. The robust data did little to ease concerns that a strong recovery and rising wages could prompt the Fed to begin unwinding its easy money policies sooner than expected. That dynamic looks set to continue to weigh on markets ahead of the Fed's June policy meeting and its annual meeting in Jackson's Hole, Wyoming in August. Number 2 is the ISM services data. The ISM Index of Service Industry Activity is set to be released on Tuesday and is expected to show continued strong growth after hitting a record high in May amid of reopening made possible by vaccinations against the coronavirus. The report could also underline undergoing labor constraints as hiring continues to lag, leading companies to offer higher wages to attract staff. This theme will likely be echoed by Wednesday's JOLT job opening and labor turnover report. It is expected to show a new record for job openings, but that hiring continues to lag far behind given potential workers are either unable or unwilling to take a job. Investors will also be looking, you got to remember, when we see it says investors, that's us, that's you, that's me. Investors will also be looking at Thursday's figures on the initial jobless claims. That's the unemployment report. Last week's report showed that the initial claims dropped to the lowest level since March of 2020, basically when the pandemic started, when widespread lockdowns were enforced to slow the first wave of the pandemic. So number 3, second half. With the markets into the second half of 2021, investors are now wondering if the stunning first half run can continue. Though the United States stock market are holding near record highs, some market analysis are have pointed to signs of caution in some areas of the market. Travel and leisure stocks along the value shares have been weighed down by worries over the rapid spread of the COVID-19 Delta variant, while yields of the United States government bonds have remained subdued amid concerns over a potentially more hawkish Fed. Some investors in recent weeks have also noted a concentration of the market's gains in fewer stocks, which some view as a sign of declining confidence in wider market. Investors will now shift their focus towards the second quarter earnings season and the progress on President Joe Biden's infrastructure bill, which will help the stock market keep up momentum. Number 4, the ECB minutes. The EBC to publish the minutes of its June policy meeting on Thursday. The ECB watchers will be on alert for news of several meetings due to take place in the coming weeks as part of the bank's review of the monetary policy strategy. The bank wants to revamp its inflation target, currently set out to close but not above 2%, and is aiming to get the review done by September. On Wednesday, the Eurozone powerhouse German to its published industrial production figures, and its European Commission is to release updated economic forecasts for the European Union. And then number 5 is the China inflation. China is to release data on both consumer price inflation and producer price inflation on Friday. Market watchers will be paying close attention to the cost of the raw materials, which have soared due to high commodity prices, whether these increases are being passed on to the consumer. Now keep in mind, you guys, raw materials usually has to do with being able to produce and manufacture microchips and other electronics. Prices are jumping in China and around the world, adding to fears that a wave of inflation could threaten the global economic recovery if it continues. So just know there's a lot of volatility coming this Friday, as we had talked a lot about, what's going to happen Tuesday, Wednesday, Thursday, and Friday. Friday could be very bearish. And so, just be ready, especially right before close. There's a lot of times a lot of investors don't like to hold throughout the weekend. And so during Power Hour on Friday, the 9th of July, there could be a massive dip, especially in the last 5 or 15 minutes. And so that can create a great buying opportunity as we then go back or get into the next following week. The next Monday will most likely open up very, very, very well, and the week will continue to be very bullish. So bad news is good news. So we just got to make sure we got plenty of buying power for these times where we know and to expect a massive dip. And so that way we're not taking a wrong turn. So just be careful. So the next thing that we need to look at is the activity. I like to look at stock market activity because it can really provide a lot more details. And so because the stock market hasn't started yet this week, we're going to look at the stock options activity for last Friday. And so I use a website called barchart.com. It's you can look it on your phone or the desktop or whatever. Now, if we go to options here, right now we're under options volume leaders. And so this is going to provide us with the most active individual calls and puts. And if you're not sure, or if you're not familiar with options, a call basically is an investor betting that the stock is going to go up, and a put is an investor betting that the stock's going to go down. And if it does, that investor's account is going up. So you can really profit from both ways, as well as I had mentioned earlier in the video, something called straddling. Straddling is where you buy both a call and a put on the same stock option. Now you can only lose what you put into a stock option, but your gains are unlimited. Just keep that for food for thought. Now gains could be 200%, they could be 500%, they could be over 1,000%. So straddling can be a like an insurance strategy if you're doing it on the right stock option. And so but going back to Friday's activity, now we're always going to see Apple dominates the list a lot for stock activity, but also a stock options activity, mostly because it's a very favorable stock option that a lot of people like to swing trade, but also to day trade. And so when you got a lot of day traders trading that same stock option, it's just going to create a lot of volume activity. Tesla is kind of the same thing. So we see that Apple really dominates the first four parts of the list, and then we have Tesla. There's a lot of puts activity with Tesla lately, which is really that's normal. A lot of people have always bet against Tesla for years, and it always seems to kind of continue to ride up, but but for now, a lot of people have been betting against Tesla, and it's pretty significant. We have Tesla right now is around $678.90 a share, with a put strike price at $450 that expires in just a couple weeks in the middle of the month of July 16th. We can see that the open interest is 19,000 with the volume of around 51,000. So, but like I said, as we're looking at this list, we're really looking for things that are providing unusual activity. As I mentioned, Apple, Tesla, that's usual activity. So we need to kind of, look for, things that are more, that have a, more of an unusual maybe pattern or characteristic, and that's why it's important to look at this list regularly, whether you're into stock options or not. As long as you're aware of what a call is and a put is, you can kind of take advantage of the information. So for example, like right here we have OPTT. Now OPTT is currently at $2.96. Now if you look at the charts on that last Friday, let me see, I'll pull it up right here. See OPTT last Friday, it had surged up like 20%. I mean, it was down here around $2.50, and now it's up around that $2.90 range. And so and when you look back a little bit, within the last 3 months or the last 6 months, it was up in that $5, almost $6 range. And so but looking at the volume bar, just a big solid green volume bar right there. I mean, it used to have a lot of activity. It's starting out something's going on with this guy. You can see that there's a buying signal right in here, using the moving average and the crossover right around when it was $2.30 some odd cents to about $2.40, and now it's up there. But looking at the calls activity, we have a $5 call strike price. So there's a lot of investors. You can see that the open interest, and keep in mind again, if you're not familiar with the options, open interest is kind of like an accumulation of volume prior, because volume, whether you're into stock options or if you're looking at just regular shares, volume resets every morning, and it just kind of and so, but open interest is like an accumulation of it from the previous days. So you can see that the open interest of OPTT for that $5 call strike price was really almost nothing. With the accumulation of since the existence of this call strike price, $3,500, and now all of a sudden, just right under 37,000. That is showing a massive amount of unusual buying activity. And whether you get it as the call, or you just buy it as a share at $3, going from $3 to $5 is a huge gain. That's what, like a 70% or 75, 80% gain. That is huge, and investors are betting a lot of money that's going to reach that in a short amount of period of time. Most likely probably 1 week. Because once you get close, to that 1 week point to the expiration date, then you're really starting to suffer time decay. So this price really needs to reach the strike price really soon. Otherwise, the time decay is really going to depreciate the value. And so OPTT, again, put that on your watch list. There's a lot of unusual activity on that one. And if you wanted to go more in depth into that, we can always look at that more information using the NASDAQ website. With that, we can now look at the most active calls and puts for that individual stock option. So again, that was OPTT. You can see that this $5 call strike price really dominated the entire list of the rest of its call strike prices and puts. Look at the puts is hardly anything. Nobody's betting against this stock. They're all betting that the stock's going to go up. So we even have a $7.50 strike price. There's several of them. There's 4 different $7.50 call strike prices that we're seeing on this. And just from that 20% increase that it did last Friday, look at this. 200% increase just on this call alone. And there's another one, 182%, 150% increase, 400% increase gain on this $7.50 call strike price. That is amazing value in just one day. So like I said, make sure that this stock goes on your watch list. Do a little bit of research on that, as well as maybe checking out some other things you may see on this website. Now, Fridays are very skittish days because, like I said, usually investors don't like holding things over the weekends. So, but sometimes we can find some things in here. But there's just been a lot of Apples and Teslas, but we do see a Ford. There's a Ford right here. Ford right now is currently at $14.93 with a call strike price at $16. That expires in August 20th. That's about 49 days with the open interest of 37,000 with now the volume of 41,000, just under 42,000. So that will eventually kind of, as the market opens Tuesday morning, this will then kind of merge itself into this open interest. So Ford is doing a lot of great things. I mean, they're you know, for a company that is kind of stumbling a little bit with its production due to the semiconductor shortage, they're really hanging in there, and they're taking a lot of online orders for the F-150 Lightning, the Bronco, but also that Maverick. That's huge. So I feel that Ford Motor Company may you know, use these online numbers to help their earning reports as we get into this next couple earning seasons, and so just be aware that Ford Motor Company is going places. So they're doing some coming out with some of the, you know, latest state-of-the-art technology when it comes to automobiles. So then we have Walmart here. Walmart WMT is currently at $140.11 with a call strike price at $145. That expires this Friday on the 9th. Now Walmart isn't normally on this list, and so again, it's good to, you know, take a look at this list regularly. Now when the stock market opens, this list will normally update every 15 minutes, so it's definitely something you want to look at all the time. And so you want to remember what's normally on here, what's not normally on here, because when you see something that's not normally on here, just make sure you consider that unusual activity, because look at this, the open interest was really nothing. It was 2,000, which is really nothing. That's the accumulation of from the existence of when this particular call strike price you know, has been out, and now it has the volume activity of 40,000. So something's going on. So whether there's news or not, sometimes we can find things looking at things this way that are flying underneath the radar, that have not yet provided any news. Maybe there's insider information, you know, whatever it is. You just got to remember, you know, buy on rumor, sell on news. You know, that's what the pros say. So some part of the goal sometimes is to make sure you're owning the stock before that it reaches the news, because that's when it's going to create a lot of volume activity. It's going to create a lot of momentum going upwards, but then you got a lot of people that begin to sell because the price is very, very high, and that can create a different trend direction going downward. So you just got to be really careful and make sure you find things before anybody else does, and that's why you want to always look at this chart on a regular basis, on it every single day. All right, let's take a look at what else do we got here. So Uber, let's see, Uber got a $53 call. It looks like regular information. So I think as we get down towards the bottom of the list here on the first page, you know, we're just seeing regular information. So we always want to look at towards the top area, anything in the, you know, the first half, you know, anything that's really providing unusual activity is where that information, where, you know, this information that we're looking for is going to be. Now when you click on options, again, that's where we were. The first page was the options volume leaders. You can click on most active options. That will provide kind of a summary of all the stock options kind of combined, so we can see that out of all of them, Apple dominated the entire system last Friday, and so Apple with AAPL closed at $139.96. They were up almost 2%, and their options volume was just around 2.7 million, which was a lot. Now, out of that volume, almost 79% are betting that Apple is going to continue to go up that day as well as the next following trading day. And so this is another piece of great valuable information that can let you know where investors are investing their money. Are they investing that the stock is going to go down? Are they investing that it's going to go up? And again, the percentages, especially the average percentages, are very similar to like the earning percentages. Like when you're around 65%, that's normally average. But when you're above 65%, even 70%, that's way above average. And so for the Apple to be almost at 80% call ratio, that is very, very rare. So something's going on there, especially with this amount of options volume. It's like, maybe Apple's getting ready to do something. Maybe they're going to provide some bit of information. Maybe it could be a leak on their next phone. Now, this year's iPhone is anticipated to have a big change. Unlike last year, going with their phone, they didn't have any major changes because of of things that had created delays. And so this year, is a big anticipation that Apple is going to release some big changes with their new iPhone. But also keep in mind that Tim Cook, the CEO of Apple, last January, announced that they're getting in the car business. By 2024, they want to have an all-electric vehicle delivered to customers. So they're getting in the car business, where the iPhone was around 75% of their revenue. And so all the other little stuff, provided just a little bit of percentages here and there, but the iPhone was their major income for the company. And so if they were to add a car on top of that, that is a big game changer for the company. That is going to create a massive amount of revenue for the company. But they have the next several years to get there. And so but just a little bit of information from them, or leak or anything, can provide a huge surge in their stock. So we always got to be aware of what Apple's doing. So Tesla, number 2, they're always on the top of the list. They're usually third on the list because people love day trading both Apple and Tesla. AMC, they're not normally on the top of this list, but lately people are just trying to keep it floating around that $50 area. And so but it looks like AMC was down 4%, or just under $52. There's a lot of options volume, but it could be that maybe people are starting to abandon it. I keep reminding people that there was an objective quite a while ago, but the objective is over, and it also ended when it was during the triple witching day a couple Fridays ago. And so but people are holding on, trying to keep it afloat. But we may see another AMC event here in a couple months. But right now it's gonna keep trending downwards for a little while. But the next one has been the Virgin Galactic with SPCE. They're usually active, but they've been showing a lot of great news. They've been getting some good clearance from the government to start releasing tourists up into space. So they're currently just under $45, but they were up 4% last Friday with a lot of options volume, just under 800,000, which is more than what it usually has. It usually has around like 350,000. So but out of that volume, you have about 66% are betting that the stock's going to keep going up. And so AMD, which is also a pretty active stock, especially lately, is just under $94, and has a lot of options, volume, and a high percentage ratio for a call at 79%, a call ratio, betting the stock's going to keep going up. And so, but there's been some good news with AMD. Now, keep in mind, AMD is manufactures microchips and processors, and so they're going. A lot of companies depend on them to develop chips for them, and so. They're a very well-known company and a company with growth. And then we have NIO. NIO is a Chinese electric automotive company, and so they are doing very, very well. Right now they just produced I think 8,000 cars last month, which I believe is the most amount of cars that they've built, and so that's growth, and so that is good as an investor. We need to see that. Or before, they were manufacturing 6,000 to 7,000 cars. So 8,000 cars, that is great for them. It wasn't that long ago, or a month ago, NIO hit, touched down to around $35, and now it recovered back up to $50, and it's still getting ready to do more. Now keep in mind, and I always try to remind our group members that growth for a company is important to the stock. Now, if NIO can only manufacture more cars, their stock is going to grow more. I mean, it's going to double or quadruple. And so now NIO just started developing a new a factory just like a couple months ago, and so it's not going to take them long until that factory is done. I mean, these guys build really, really quick, and so once this thing is up, I mean, they're going to double. I mean, we're going to build from 8 to 15 to 20,000 cars a month. We're going to see NIO at $100 a share, easy. And so, but right now we do see a lot of options activity at 68% call ratio, which is really, really good. Then we got Amazon, Microsoft, Nvidia. Now, as we get more into July, and so Nvidia right now is $819 a share. They're up 1%. We're getting closer to the their deadline for when they're going to do the split. Now, this is just my personal belief that I believe that Nvidia will probably reach $1,000 right around the time where it's going to split, and I believe it's a a 5-way split. I can't remember. I'll have to double check. But if they get to $1,000, do a 5-way split, each one's going to be $200. So anytime a stock does a split or a reverse split, what happens after? They always go down. But during knowing that the stock is going to do a split, it usually trends upwards. So just know that usually this wave goes up and up and up and up until it splits, and then everybody starts to kind of get out, secures their profit or whatever, your panic sell, whatever's going on. It's just normal. It's just the nature of the beast, and so just know that that's normal. But if you're into stock options, we can play both sides. We can buy calls riding the wave up, and then once they do the split, start buying puts riding the wave down and profit both sides. And so great opportunities coming with Nvidia this month. So we're going to see a lot of activity going on with this ticker NVDA. So be sure to put some of these on your watch list. Facebook, they're normally on this list, but again, like I said, you just really want to focus more towards the the top half of the list here. But continue to look down. If you do see anything really unusual on the ratios. There could be something beginning to happen. You can see like this ATOS, this therapeutics. They're $5.37. They're down a lot, 16%. We have an option volume of 160,000, which really isn't a whole lot, but an 82% call ratio. So you got to be careful when you see a lot of red like this. There could be investors trying to buy their costs down, and so you don't want to get involved in that. It's better to see some green and seeing a lot of people buying a lot of calls, betting that the stock's going to keep going up, rather than seeing a lot of red and a lot of people buying, hoping that it's going to go up. And so just be careful with that. Now, the third page you can go to under options is the unusual options activity. Just in case if there is anything that we didn't see, we may be able to find, because what it's going to do is going to kind of separate and provide us individual stock options with a big gap between the open interest and the volume. And so right now, the one with the biggest volume is the Walmart, the $145 call strike price with the $40 or 40,000 volume, and then the 2,000 open interest. The next one would be this 26,000 volume would be the Apple put, 139. This seems more like a swing trading, because like I said, Apple is very well known for day trading and swing traders, and so I think this is just a lot of people, and it could be straddling. A lot of people buying a call and a put on Apple because maybe they're not sure what Monday morning is going to be like, so they may just buy both, just in case. And so a lot of good information here. We can see that the Snapchat is on the top of this list with the $65 call strike price, or not a call but a put strike price, and Snapchat right now is at $68.49. So it expires in this month of July on the 16th. That expires in just a couple weeks, with an open interest of 153 and now the volume of 18,000. So it's definitely a lot of people, a lot of investors must be really betting against Snapchat. So because there's a couple different puts in here. So anyways. There's a lot of information that's going to happen this week, so just be careful. Plan ahead. If you have any questions, message me on Facebook Messenger. I'll start sharing these videos every weekend, around Sunday. So I'll post these under our announcement section. So. It'll be easy to, I think, to watch than the live chat sessions that we were doing previously. So thank you all very much for watching. Hope this helps. Stay safe, make good choices, and good luck.